With the UK and the EU seemingly closing in on an agreement on the financial settlement for Brexit, trade talks are now within sight, although Angela Merkel, the German Chancellor, has warned that the talks are likely to be the hard part. Matthew Lynn is columnist at the Telegraph and Money Week, and he joins us now with some more on this. But it's not just that as well. Of course, it's the Irish issue as well, the hard border that the UK has with Ireland. How far down the path are we realistically to getting a deal by March 2019?
Well, that's a big question. I mean, we're clearly a little bit closer than we were possibly in the summer, where it looked like we're a long way apart. We seem to be quite close on the financial settlement, which is probably the biggest issue. That seems to be the thing that they care most about in Brussels, is just not having any kind of financial disruption to the organisation. We're reasonably close on citizens' rights. I mean, you know, it's kind of splitting hairs, the kind of stuff they're talking about. It's, unless you're some kind of human rights lawyer, it's hard to follow when they're talking about people's grandmothers and things like that have rights to remain. That's pretty minor stuff. The Irish one is quite tricky. You know, the Irish border has been a problem for about 300 years now on whatever kind of regime you have. So that's going to be quite hard. That's going to take a bit of goodwill on both sides. But it's quite hard to see that actually disrupting a deal. So it's looking a lot closer. I mean, but the interesting question going forward, of course, is going to be the trade deal. Because we've now we've basically done what they want us to do. We've ticked all their boxes. We now go forward to talk about a trade deal. What we want is a kind of Canada plus free trade deal that gives us pretty seamless access to the single market. So it's going to be an interesting question. Do they really want that over on that side, or are there still kind of headbangers in Brussels who want to punish the UK and want to make sure that the UK suffers? So that's going to be the interesting thing to discover probably in the new year.
Well, of course, one must assume that if the UK suffers, then the EU suffers as well. Yes, the UK is a smaller part of its overall business, but nonetheless, the EU will suffer if there is no deal. That surely is the case, isn't it?
Yeah, of course it's the case. I mean, I think the trouble is, you know, if you look at it in terms of sort of game theory or balance of power, the UK suffers, the EU suffers. The EU doesn't suffer as much, you know, because obviously as a percentage of their trade, you know, we're a big partner. We're a very big partner for Belgium, for Holland, less so for Germany. In total money terms, it's a lot of money, but as a percentage of their GDP, it's not that huge. So they can probably take it on here. And I mean, the other thing, it's a sour point to make, but the fanatics in Brussels, the real Euro federalists, don't actually mind about that. You know, we saw that with the Euro, didn't we? I mean, the Euro has clearly imposed a lot of damage on the peripheral economies. If you were looking at any kind of rational economist anywhere in the world would say, you know, this currency doesn't work for Italy, this currency doesn't work for Greece, so you try and find a way of getting them out, but they don't care because it's part of the federal project. So if there's a little bit of economic damage, you know, to the true believers in a federal Europe, that doesn't matter. So we have to bear that in mind. You know, that it'll be a problem for them, but they don't care that much.
Do you see a deal being worked out by March 2019? And do you see the outline of a deal at least, albeit may well be with a variation on what we're now expecting to be done, basically on other deals such as Canada and the EU and so forth? Do you see something fudged in the end?
Yeah, I think in the end we'll get a deal. I mean, we've ticked most of the boxes. We ought to at least be able to get a transitional arrangement with pretty much tariff-free trade between the UK and the rest of the EU. Because why not? I mean, they offer that to the Canadians. They offer that to other countries around the world, and the regulatory harmonisation is there. So there might be some stuff that might last for 2 years. It might last for 5 years. There might be some stuff going forward about, you know, regulatory differences, regulatory divergence between the UK and Europe. I mean, it's important that we keep that. There's no point going through all the hassle and trauma of leaving the EU if we don't regain control over our regulatory system, if we don't have control over our own economy. But certainly in a transitional period and going forward, I mean, you know, if you look at it rationally, you know, if they do a free trade deal with Canada, why not with us? You know, it's just it becomes silly. But I think there will be quite a lot of voices in Brussels who will be being quite silly.
So what's been priced in? I mean, we've seen sterling dollar down at 118, the low point, it's now just over 132, 133, around about that area now. What's been priced in the currency markets?
I think the currency markets have recovered their nerve. I mean, I think two things become clear in the sterling market. It's recovered a long way, and it's actually not very short. It's not very far short now of where it was before we voted to leave. If you remember, on the night of the referendum, pretty much everyone around here in this part of London thought it was going to be a Remain vote. They were, you know, that's where all the money was saying. Sterling was priced for a Remain vote. They were shocked by the actual result. Obviously, it took a big dive. It's clawed back. What is it? 80% of those losses. We'd have to call up a chart, but very very close to it. By by the new year, it could well be back to where it was before the referendum. I think the markets have priced in two things. They're starting to price in the fact that there probably will be, as we were just saying, some kind of fudge deal. There'll be some kind of arrangement. But the other thing they've priced in is we're now more than a year on. The economic damage is fairly limited. If you just look at the inward investment numbers, you look at the number of companies still coming to the UK, you look at the employment numbers, you look at lots of kind of indicators. The UK economy is doing fine. And it's not like anyone out there doesn't know we're leaving the EU. It's not like 2019 there's going to be somebody running a company saying, what, they're leaving? Britain's leaving the EU. Why didn't anyone tell us? It's not going to come as a shock on the day. Everyone knows about that. But companies are still buying, people are still buying properties in London, people are still investing in the UK. So what we discovered is that it matters a bit, and will suffer some economic damage, but not, quite minor. I mean, actually, we're seeing the economic damage now. The rest of the eurozone is growing quite a decent clip. 2.5% global growth this year. 3.5% plus. We're going to be down at 1.5%. We're one of the slowest growing major economies. You'd expect us to be doing a lot better. That's Brexit. That is the catastrophe. But in the greater scheme of things, we're probably growing at 1.5% rather than 2.5%. That's bad. Catastrophe? No.
Yeah, we've seen a couple of sectors beaten up recently, retailers especially. I mean, the consumer confidence levels, we saw this, the GfK recently, the consumer confidence at -12 it was, lower than had been expected. Consumers are under a lot of pressure, seemingly brought about by imported inflation. We've got prices going up, we haven't got wages going up as much. There is this worry about the outcome. What sectors do you think could see some really interesting gains, bearing in mind we've got the retail sector, for example, having been beaten up on worries about the current situation? Which sectors are going to give the best advantage for those trading the sectors at the moment?
Yeah, I mean, it's an interesting question. I mean, who benefits from Brexit? I mean, it's a flip side of what I was saying one moment ago, that there isn't much of a catastrophe. Leaving the EU doesn't tank the economy, despite what some people were saying. And the flip side of that is it doesn't give it a huge boost either. I think what we're actually going to discover over a 5-year process is that the EU is actually not that relevant to any major economy. What really counts is WTO rules, not EU rules. But there are some sectors that benefit. I mean, you can speculate about them, and I think it'll depend on what kind of policies we have after we leave. So if you take something like food, retailing foods, if you add in food retailers and restaurants, which are a huge industry in the UK, if we decide to go for zero tariffs on agriculture, because high external tariffs outside the union, one of the major policies of leaving the EU, we'll have much cheaper food. Because we can import it at zero tariffs from anywhere in the world. We can go to much, much cheaper suppliers, partly in the EU, but in North Africa, in Australia, Canada, South America, where they produce food very cheaply. Now, if you're a restaurant, if your ingredients get a lot cheaper, you can still charge a tenner for the pizza, but your costs go down. So that's good for your profit. So I think in certain sectors like that, we could see significant boosts. We could see boosts to areas where we export a lot to the US. If we can get a free trade deal with the US, which seems to be a lot of talk about it. The US seems quite welcoming towards that. The EU's never done a free trade deal with the US. It has it on the cards. They can never actually agree with it. The United States is not a particularly free trading country, despite how they portray themselves. So it's one of the major economies that has quite significant tariffs on all kinds of things. I'm trying to remember them off my head. I have to look at them. Umbrellas, stuff like that. Actually, clothing. So we produce a lot of. We're very good at luxury clothing, and they particularly like. You go to New York, they like particularly traditional menswear, traditional women's wear. That has quite high tariffs, shoes, things like that. So there could be small sectors like that where you see a real boost.
How about our main money-generating machine in this country, financials? That we are warned are going to get hit very, very badly in the event of anything other than a completely free, seamless, well-oiled free trade deal.
Yeah, absolutely. We'll wait and see. I mean, we've heard Canada. I think it's overdone. I think that, the warning.
The pessimism is overdone.
The pessimism's overdone. I mean, the city is very adaptable. The city is very, very flexible. Even if you look at some of the Bank of England warnings, I think they came out the other day speculating 45,000 jobs or so, 50,000 jobs. But actually, if these numbers sound big, but when you look at the number of people working in financial services, it's something like 2 million in the UK. Now, I know a lot of those people are just in insurance offices or bank branches around the countryside, and they're not going to be particularly hit. But it's 50,000 in that kind of context of the numbers of people who work in financial services. It's 2 or 3%. And actually, if you think about it, any kind of healthy industry, it's going to have 4 to 5% turnover of companies and staff and operations just in a normal year. So I think whatever it loses as a result of Brexit, it can probably replicate quite quickly. And actually, one of the bullish bets you should probably make is on London. London took a big hit on Brexit. London property in particular, a lot of fears, a lot of worries about London. But the London economy is extraordinarily healthy and will bounce back very quickly.
Some of the fears, some of the worries around that, and indeed this is for the financial sector as well as other areas as well, is the fact that Labour could well be, we could end up not getting the right people here. People have been frightened off already. We know that. We've been seeing some jobs, of course, moving abroad and some people going back home. And they're the skills that we need, the IT specialists. And of course, we're talking there about professional people, but in fact, the people that are picking the fruit in the fields, we need those people in. We're not going to have that Labour source, are we?
Well, I'm going to make 2 points about that. One, it depends what kind of immigration policies we decide to have. I mean, we leave the EU. We're not governed by EU law anymore. It's going to be up to us to decide what kind of policies we want. Do we want very high levels of immigration? I mean, I think there are two sides of that. I think at the skilled level, my bet would be that we'll have a pretty open door. I think the government recognises that companies need skilled people, and it might well be better for many companies because, of course, they can draw in people from anywhere around the world. I mean, at the moment, it's anyone who runs a company will tell you, try to hire somebody from Canada, try and hire somebody from India, try and hire somebody from Korea. Virtually impossible because they're so tight on that because it's the only bit of the immigration policy they can control. So I think we can still bring in the skilled people. I'd be very surprised. We'll have the power to stop it. I'd be very surprised if we stopped it. We're run by the Conservative Party. It's a pro-business party, always has been. So that would be an amazing decision to make. I think down at the fruit picking level, I think we'll do much less of that. And I think it was questionable whether we really needed to grow so much fruit in this country. I think what we did as a result of the open door immigration policy, we became very, very good at generating lots and lots of low skill, low value added jobs that we had to draw in immigrants to do them. I think we'll just lose a lot of that. Yeah. And I think that won't do any damage to the economy at all.
Yeah, you mentioned the Conservative Party. That's for another day. But at the moment, at least,
that'll be a big conversation.
That's right. But Matthew, indeed, in the meantime, thank you very much indeed for joining us. Matthew Lynn is columnist at the Telegraph and Money Week.